Now, I want to show you the less discussed positive elements of investing for cash flow instead of growth, the psychological and practical ones. Because, let's face it, numbers and math and spreadsheets don't mean a thing if you can't execute the strategy or if it is making you miserable all the time. So let's dive in. First, I need to bust a very pervasive myth in the investing community, that investing is only a game of numbers and returns. It is not. You must always include the emotional and psychological factors. We are all human beings and we succumb to different vices and biases depending on our genetics, temperament, upbringing, and the life situation we are currently in. For me, for example, I take great pleasure and comfort in the fact that I know that my passive cash flow from my investments can pay for my standard living expenses. This, to me, and perhaps to you, is extremely important. To never touch your assets and still be able to live off of them. And I would trade a few percentages of total stock returns for that feeling if I had to, gladly. Another psychological advantage of dividend investing is that it takes emotions like FOMO, or fear of missing out of the process. Imagine you buy company X. It doesn't pay any cash. You hold it for a year. It goes up 30%. You're now thinking, if I hold it just a little bit more, it might make 40%. Next thing you know, the stock crumbles. Or you have the reverse situation. You sell for profit, and right after you do, the stock shoots up another 30%. Now you feel like a fool. It is just an absolute roller coaster of negative emotions. Also, imagine how much more fulfilled you're going to be if you are constantly getting cash in your account, regardless of whether you spend it or reinvest it, instead of watching a line go up and down on a screen for years and years. Even if we are not talking about emotions, a super practical reason why dividend investing is better than growth investing, in my opinion, is that you can't pay your lunch if Tesla's price goes up, but you can with Procter & Gamble's dividend. Just think how easier it is to calculate your monthly income and how much you can afford to spend if you have regular cash flow. Another psychological benefit is that dividend investing focuses your attention on the right things. When you invest only for price appreciation, you might get caught up in the latest trend or only focus on the stock price performance. However, dividend investors are much more interested in how the actual business is doing. As Warren Buffett famously says, you are not just buying stocks, you are becoming an owner in a business. When you need to assess how likely it is for a company to sustain or increase its dividends, you focus on metrics like free cash flow, payout ratio, interest payment coverage, and a lot of other metrics that I show my students in the Dividend Method program. You just become a better investor who is way more capable of evaluating a company's performance simply by shifting your goal and focus. In general, if a strategy or approach doesn't align with your emotions, you are screwed. It doesn't matter what financial return you get. At one point, the pressure will be too much, you will lose sleep, you will be miserable, and you will either give up or worse, make an emotional decision that will ruin you financially. A good example of that, which I can give, is the heated topic of home ownership. Should you own a home or should you invest the money and rent? This is something that I have argued about for years. The truth is this: if you have a dream of owning your home and want to have the pride of ownership, you should do it. I, for example, would hate to live in someone else's place. What you see behind me is part of my home that I fully own without any mortgages. Now, it is a relatively big apartment. Could have I used the cash to purchase several smaller apartments, rent them out, and find a similar apartment like this to move in, which I could rent? Probably. And I would have probably made $200 more in monthly passive income, since smaller apartments generally give you higher rent for the same space. Is it worth it for me? No, not at all. I like owning the place where I live, and this emotion is more important to me than the additional $200. But hey, it might not be for you. And this is why you need to know yourself and create an investment strategy accordingly.